Hello and welcome. It is Sunday, the 5th day of March, 2017. My name is Derek and welcome. Let's take a look at the silver daily and weekly charts. But before that, I've purchased the recent Alta March Webbot report from halfpasthuman.com, and Cliff High has allowed me to show little bits of pieces of information from it. So I'm going to read two paragraphs from page 25. And thanks for all of the tips and gratuities sent via Bitcoin, so I was able to get this and able to use these funds within the community. And I'm going to go over two paragraphs, page 25, 37. And the data for Bitcoin is closely tied in its growth patterns to the currency problems that are described as globally affecting populations. These sets have Bitcoin being kicked upward in currency prices as the sovereign currencies are showing as falling against each other and against gold and silver. The most dramatic raise in price for Bitcoin shows as developing over March and progressing through the chaos of the following months. So what I read to this point is that markets should only be having their pullbacks just like that, a higher low. And I'm going to explain why in Bitcoin, why it's almost a gimme that each pullback should be a higher low for an extended period of time. But I'll talk about that when I'm finished this and on the charts. But it also probably shows that Bitcoin is going to overperform silver and gold, I think, over the next little while. But that might be short-lived as the panic to get into silver comes into play, and then that will outgain almost everything for its period of time. Continuing further, there are sets for a slowdown in rate of growth over summer, up to the point of increasing earthquakes. These earthquake sets are indicated to be participants in social chaos in which Bitcoin is described as coming to the rescue as other systems will have broken down. This is where I want to talk about people stating Webbot 50-50. And heck, you know what? Let's even talk about right a third of the time for that matter. Because what would be the probability odds that sometime this summer a significant earthquake is going to affect some part of this world, and the Bitcoin is going to be used in some sort of relief effort within it so much more effectively? What would be the percentage chances of just saying something like that would happen? Not that good. Sort of like the chances of a California gold rush, which was recently predicted. Or even Donald Trump being president when there were actually betting odds of like 3-1, 3.5-1 against him, maybe even 5-1. So when you're getting right half the time, 40% of the time on things that should happen much less frequently, that's pretty damn good in my book. Let's continue on further within the next page, or the next paragraph within page 25. As these sets are growing, the data has the hyperinflation being noticeable within the real economy. These sets are showing that the economic impacts of the currency crisis will be pressuring both corporations and banks into moving into Bitcoin. Which, and this is like the blockbuster ideology or case reference. When Blockbuster was booming in the 1990s with rentals of DVDs and video game rentals and even selling these DVDs. They were kicking ass, and all of a sudden the streaming internet videos started to take form. Blockbuster did not transition into the changing times, and they went bankrupt. And this is a very similar measure for businesses. If you want to stay in business, if people are willing to be buying with Bitcoin, you might as well accept it yourself. In fact, you as a business would probably need to buy in Bitcoin as well. And even talking further about stuff not written in or talked about with Bitcoin or Webbot and Bitcoin is that it's going to work out that China is just going to be forced to use it as their currency, as theirs is going to fall and they're going to have no choice but to do it, meaning it's what people want. It's really all we can do. Those are some of the key points. But moving on, further sets have the governments also becoming buyers. These sets are all cross-linked over the bond markets and substantial increases into rates. These sets have the U.S. Federal Reserve becoming disenfranchised by the USA pop government. And Federal Reserve, Janet Yellen, and the USA pop government, Donald Trump. And Donald Trump seems as if he's got a timeline plan for things that he wants to do. And it wouldn't surprise me if ending the Fed is one of them. At what point would it be done? I would guess normally 2018, some point, maybe late 2018 even. But from this set, it's sounding like it's going to happen over the next few months. Will be interesting to see how this comes into play. Continuing further, note that these growth patterns have a clear separation between the government and officialdom. Now, officialdom would be another different set. I've only quickly scanned through it as of now and used search terms to find key things. I haven't read it all, and I will over the next 7 to 10 days. But I'm sure there'll be much more on it. But the officialdom sets are showing as wailing, crying, freaking out, bad behavior in public. That one would be interesting. And many other sets indicating a very negative emotional reaction. So this is basically stating that the shit is hitting the fan. Relatively now, you have time to get into real assets, a different monetary value system via gold, silver, Bitcoin. But the amount of time you have is very limited. So now let's move on to the charts. And what I said I would explain is why I would expect all correction, all decent move down to be met with a decent amount of buyers, sort of like a situation like this. Whenever you see Bitcoin having a substantial down move, 10, 12%, then that brings, especially a move like this, that brings a lot of strategic buyers into play. For if the similar thing were to happen, where in 10 minutes the market has a similar looking red candle, then this would be big money buyers, people with 7 figures for Bitcoin, or very high 6 figures could do decent amount of damage as well. And the culmination of many of these people together is what would make this go higher. How? Well, let's just assume that before this crash happens, you're in a sideways range. But all of the offers to sell aren't below here. They're in this area. So during the 10-minute period in which a move like this is to occur, that means the only sell orders below the previous break would be the ones added within the last 10 minutes. Yes, some would be automated. Many might be automated, and there'll be a lot that would be added in there. However, the dollar cost that it would take to take, say, a move to go from here to the previous resistance would be the amount to go from like here to like, the amount to go from like here to here would be like to go from like here to like here. Because there's the amount of shares, we will state, that would be in this range that would equal here would be this, meaning only because there's a few amount of sell orders in, a lot of times buyers will come in mass. That's why oftentimes when you see markets go like this and this, you often get a big plunge like that. That's because at this point, buyers are like, okay, I can buy from here to here. And it's only going to cost me this, and I'll have a dollar cost average here after I'm done, which means short term, I'll already start ahead of the game. So that is the mathematical way in which a lot of these free markets will be done. And when people are very bullish about it, that'll happen. When there's more people cautious about situations, you'll lay off and maybe only get a move like this where the market's barely retrace higher, which was the case. But this is a situation of the big participants being the bankers, and if this is what they choose to do, this is what they have chosen to do, is just have it go up a little bit after the fact here. And with the system breaking down, this means it doesn't matter where you buy, when you buy. You don't even have to look at the charts. You just go on, you put your buy order for your silver bullion, because quite frankly, whether you buy here, 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 or even at 35, when it comes down to the point of the masses getting into this to any out of cash, and silver being one of the things of getting into, it's going to make the markets do only one thing, and that is move to the upside, which means short term, sure, maybe these moves can come down towards here. And if they do, I'll be playing a mathematical Fibonacci retracements indicating key support, trying to find areas in which you can find a decent buying point. And I guess the next one right now would be in at about 1739. Maybe this market will have some sort of price correction and establish a key level for support. Maybe it's going to go sideways. It could even regain its trend like it did in here by having decent rallies that would first step get to the 18 average band, next step get above it. In that case, it could go back and then retest its range that it had, which would be the one inside here. I've added the lower range, which connects this low with this low at the exact same rate of ascent as this one, which is now lined up to here, which is a more bigger range to say the least as well. So that will be the information for the daily chart. As far as the weekly chart is concerned, 9 up weeks in a row is over. This final week is an outside day, which means this high was higher than its previous weeks, and the low was lower than the previous week. It's also a sideways consolidation move from up move, and then the last 3 weeks have been sideways with small gains. You can put it in a situation like that. I'm looking for a change of reversal, and as I talk about this so many times on the channel, step 1, band flatten out. Step 2, establish resistance. Step 3, break it. And if it breaks it, it's probably going to have a decent gain. It's just going to be bullish in my book. So any break of this point now is going to be bullish enough, because normally I want to push to the back to the band, and it still might do that. But if this outside day looks as it is in this, and it's had this type of fast move, and that's a good enough correction within this move to state if the buyers come back into control of the market, this thing is ready to get going. And I'll probably have short-term test of this level and mid-term test of its previous high within this time frame. So that's one of the things that I would be expecting towards such. But overall, this 18 average is going to be very big. The range is about 17 to 1770. It's going to open at 1764, the 18 average of highs, that is. So anything in the 17 to 17 and 3/4 range is the correctionary phase, and 17 is going to be a very big, important level as far as the holding of this market. I don't think it's going to go below it, but of course, being the bankers do what they do to choose, they'll do whatever. And if they do, then that does mean great buying opportunities. So then, thank you for tuning in, and have yourself a great week. Bye-bye.